So we're recording, we're broadcasting live. Okay, I think Scott, take it away.
Awesome. Well, good morning, everyone. My name is Scott Rogowski. I'm the director of NorCal SBDC, Small Business Development Centers Network for the Finance Center. And we are bringing this here to you today. It's an interactive webinar with our branding of Ask SBDC. And this is our CARES Update live Q&A. This is for small businesses. So clients and not clients, we welcome all of you. And this is our 22nd session. So we've been doing this every Monday, Wednesday, Friday. Hope everyone enjoyed your 3-day weekend, Memorial Day weekend. And thank you for all of you and your families that served our country. And so we did skip Monday, but we're here Wednesday and it's May 27th and we are all in this together. So Northern California SBDC, we are the most northern 36 counties of the state of California. And so we go from the Oregon border down the coast to Santa Cruz. We cover all 9 counties of the Bay Area. We go southeast to Stockton, then back up through the Nevada border and the Oregon border. We are supported, meaning we are funded by SBA, Small Business Administration. That is where our federal funding comes from. We're also state funded by the Economic Development Office of the Governor's Office, which is called GoBiz. Because of our funding, we come to you and organizations, small business owners, organizations at no cost. We can meet with you and work with you and kind of help you advise your either startup, your expansion, your business, or your disaster that you're experiencing with COVID at no cost. And we'll also offer these webinars, educational events, workshops, also mostly at no cost. I am the director of the Finance Center for Northern California SBDC. I also have my associate director on the phone. Her name is Sunita Maharaj. She just waved to you. She is going to be answering questions as I speak during this webinar, and then we will answer questions together at the end. Hopefully we can get through all the questions, but we do have ways you can contact us if we're not able to do that. And then also, so we, at the Finance Center, so we specialize in helping business owners like yourself or startups or entrepreneurs access capital. Before COVID, that was for startups and expansion and buying buildings and equipment and stuff like that. During COVID, we are the experts on helping you understand what the EIDL is, the PPP, the state loan guarantee, and then any other loans that may be available to you. And if you are starting your business at this time, you found some sort of opportunity or you want to reinvent yourself, and you need to know how to pivot and put your financials together, that's what we're here for you to do to help you at no cost. And we're really excited to be available to do that with you. So our agenda, we'll have a disclaimer. We're gonna go over PPP. We're gonna go over the Economic Injury Disaster Loan, which is called EIDL. We're gonna go over the state loan guarantee, talk to you about a little bit about how we are partnering with attorneys and getting the other questions answered that we don't normally talk about, which is around the payroll, around EDD, around PUA, PUI, all that great stuff. And then we'll also have an SBA update. I noticed that we have Noah Brode on the call. He's from the San Francisco SBA district office, but he does a lot of work with us throughout all Northern California that we cover. So thank you, Noah, for joining. And we will get, hey, good morning. So we'll get to Noah a little bit later for his update and see where we can go from there. So disclaimer, things are changing all the time. This information was correct when we put this presentation together. We did kind of sort of, for those of you that have watched us more than once, we kind of sort of pivoted this presentation to be a little bit different than the ones that we have been doing for the last 2 weeks, just because of the information and the questions that we keep getting from business owners like yourself on how to navigate these loans. So we kind of flipped it around a little bit, but it's still pretty much the same. So we want to let you know that things are changing all the time, which I'm sure you know. So don't hesitate to apply for the PPP, regardless if you think you do not qualify. If you do have investors or lots of partners in your company, the way you're structured, please ask them first before you apply. They may or may not want you to take on the debt. There's still money available with PPP. from what I know. Is that true, Noah? There's still money available?
There is, yep.
Okay, cool. So there is still money available. Probably get into that a little bit later with Noah. The EIDL advance is an automatic direct deposit, ACH, which is automatic clearinghouse. It's a transaction that just kind of goes into your checking account without you knowing or noticing it's there. I've had people tell me that, hey, I didn't see the $1,000. Where's it at? And then they go look for it. I didn't see the $9,000. Where's it at? And they go look for it and they find it. So it's SBA-D for disaster. It'll just automatically go in your checking account. They're not going to call you, talk to you, text you, email you, or anything. It's just going to be there. Because when you applied, you gave them your routing number and account number. So if you applied for the EIDL before the web portal shut down in April sometime, I think, SBA will get back to you. You just need to be patient. Please be patient. They don't have access to check the status of your EIDL loan, but they just want you to be patient. You will most likely receive your EIDL advance before you receive your EIDL loan. And they will tell you if you're declined or approved for the EIDL loan. The advance they won't. They're just going to kind of deposit it in there for you. So you got to be aware of that. Okay, so for the PPP, the Paycheck Protection Program, this is a 1% loan for 2 years. You don't have to make a payment for the first 6 months, but interest will accrue in the 6 months. So if you waited 6 months to make a payment, then technically you only have 18 months to pay it off. This loan, it doesn't say on here, but there is no personal guarantee like the EIDL loan. So there's no personal guarantee. There is a universal form that is on the Treasury's website if you have not applied. We also have it at loans@asksbdc.com. We can get that for you. If you're a sole proprietor, we get a lot of questions like, hey, I'm self-employed. Does that mean I'm a sole proprietor? And the answer is yes. Hey, I have a 1099 contract. Am I a self-employed individual? The answer is yes. Mostly, if you file a Schedule C, which is on your 1040 tax return in the state of California, 1040, then Schedule C, if you file something on that Schedule C, you are what's known as a sole proprietor and self-employed individual contractor. You need to gather your 2019 1099s. To gather that together. It would be preferable that you have your 2019 Schedule C either drafted or filed. If you don't, 2018 is fine because the IRS extended the tax date till July 15th. For all other entities, anybody that does not file Schedule C is another entity. So whether you file 1065 for an LLC, 1120S or C for a corporation, you need to get together all your W-2s and 941s or 940s, which are your quarterly reports. You need to gather all those together to help you apply for PPP, as well as help you get the forgiveness. So the 8 weeks start the day you get funded or the first payroll date after you get funded. So if you get funded today and your first payroll date is not till Sunday, then that's the day that your 8 weeks will start. That's called the covered period. If it starts the day you get funded, that's the covered period. If it starts the first payroll date after you get funded, that is called the alternative covered period. I'm sure there's some questions about that. We'll get to it. What's forgivable? This is very high level. We're not going over the 11-page forgivability and application for the PPP on this webinar. But at high level, 75 to 100% spent on payroll costs has an opportunity of potentially being 100% forgivable if properly documented. 25% or less can be spent on rent, utilities, and any interest mortgage payments. So if you don't own your building, it'd be rent. If you do own your building, like you have a loan on it, then you get to count your interest payments. So that's the quick rundown version of that. All right, so what's included in the payroll costs? These are the expenses that are included in payroll costs for PPP. So you got salaries, wages, commissions, anything that is up to $100,000 or less. Employee benefits, related to leave, admin leave, allowance for separation, health, care, insurance, retirement, even retirement contributions, and workman's comp is not included. Before, when we started this about 2 months ago, possibly 6 weeks ago, something like that, we weren't sure if workman's comp was included. We had some advice that guidance where you told it wasn't, and it is not. Workman's comp insurance is not included. So state and local taxes assessed on compensation. So no federal taxes, no FICA. For a sole proprietor or independent individual, self-employed, you're limited to the first $100,000 as far as income goes, which would be on your Schedule C. So what's not included in payroll costs, so anything over $100,000. So if you have an employee that you pay for $120,000, the $100,000 of their payroll would be potentially covered. The $20,000 would not be covered. So payments to independent contractors are not included because they get to apply all by themselves since EIDL and PPP is open for them. So you cannot include them in your payroll costs as far as a forgivable measure. So any taxes imposed is not included. Any compensation to employees, principal place residence is outside the U.S. And then the qualified sick leave, qualified family leave wages for credit is allowed under this section for your families first. So it's not included. What's forgivable? We kind of went over that. It's a 25-75 split. As far as forgivability, we kind of went over this. There has been a lot more description or guidance around what utilities mean. And it's, electricity, gas. We don't know if that's fuel or gas. We're assuming that it's gas, like heater gas. Water, transportation. We don't have a clear definition on what transportation means unless Noah has some more information to talk about. Telephone or internet access. So this is what covered. All right. So
I would just add that, like the language, both in the forms and in the rules that have been released, that says that they are payments for the distribution of those things. So distribution of electricity, gas, water, transportation, telephone, or internet access.
Awesome.
Which, might raise new questions and also clarify others.
We love new questions, so thank you, Noah. We love them all. All right, so put that there. All right, so for Schedule C and Schedule K, we put this on here so that as a Schedule C, which is a sole proprietor, or self-employed, or independent contractor, the loan amount is calculated by taking line 31, which is your net profit or loss. If it's negative, then it would be very hard for you to get approved for Triple P. EIDL, you would still have a chance, potentially. So you take line 31 divided by 12 times by 2.5, and that's your total loan amount for PPP as a sole prop. The Schedule K is like a partnership out of an LLC or something like that. You will know if you have a Schedule K. The loan amount is similar. Take box 14 divided by 12 times 2.5. That'll tell you your loan amount. For forgivability for both these entity types, you take line 31 divided by 52 weeks times by 8, because that's the allowable time of forgivability is 8 weeks. And that'll tell you what you qualify for forgiveness, 100% forgiveness. So the max amount for an individual, your sole proprietor, you, yourself, or any employee per se, is $15,385, because that's $100,000 divided by 52 times 8 is $15,385. Schedule K, same thing. You divide the same number by 52 times by 8, and that's the total for that. All right, so that's all Triple P. We didn't talk about lenders like we normally do because you know that we have access to most of the lenders across the country and in the state of California, obviously, that could help you get PPP money if you still need it. Please apply. If you haven't applied, there is still money left. Now we're going to jump into the Economic Injury Disaster Loan, which is the EIDL loan. This is a 30-year loan. It's 3.75% for for-profits, 2.75% for nonprofits. There's 11 months payment deferment, meaning you don't have to make your first payment until the first of the 12th month. This money is unforgivable. This money is not forgivable. And currently at this time, it's only open for agricultural businesses, unless Noah says otherwise, but he's probably not going to. It is only currently open for agricultural businesses at this time. Some of the forms that you may need are listed here below. If you're not sure where to find them or you want to know how to fill them out, you can reach out to us and we'll help you at no cost. But these are just some of the forms that you may or may not need be asked for. This might be a little blurry on your end. It's kind of like copy and paste from another presentation. But what can the EIDL be spent on? Pay for financial obligations, operating expenses, which could have been paid, which have paid had the disaster not occurred. So, meaning it explains it here. I'm not going to really read it to you, but it talks about fixed expenses. It also talks about what it does not include, which is refinancing any long-term debt. You can make monthly interest payments, you just can't pay off debt with it. Any tax penalties, if you have tax liens and stuff like that. This money is not used for expansion costs, dividends, or bonuses. And this money is not to necessarily pay back what happened before you got the funding. It's going forward. So whatever the operating expenses are to run and operate your business, sustain it, pay your employees, and make sure that it operates and stays in business, that's what this money is used for. It is a first come, first served basis. Anyone who applied before March 30th needs to reapply if you have a loan number that starts with a 2. So the only two types of individuals that can apply for the EIDL currently today are agricultural businesses and individuals or businesses that applied before March 30th and have a loan number that starts with 2, because they are opening that up to you as well. And the declaration date on here is January 31st. So you would have had to been in business before January 31st as the declaration date. So that means if you started in January this year, you could potentially qualify for this EIDL loan. The advance is $1,000 per employee. So if you're a sole proprietor, you qualify for $1,000. If you have 10 or more employees, you qualify for $10,000. All right, so that's the EIDL and the PPP. There's also in the state of California what we call state guaranteed disaster loans. The PPP and the EIDL are both federally guaranteed by SBA. The EIDL is direct money from SBA. There's no lenders involved. It comes directly from SBA to you. You pay SBA back. The PPP comes from lenders, everyday lenders that you bank with or you can see down the street, any 7A SBA lender. That money comes from the lenders and then is backed by SBA on the federal side. There's a 100% guarantee on the SBA federal side that the PPP has. So then there's state guarantee loans, which is housed under the infrastructure bank out of GoBiz, which is called iBank. And they work with what's called financial development corporations. And we have some of them mentioned here below on this slide. But at the top, what we're saying is that if you do not qualify or you were declined, which means you don't qualify for an EIDL and a PPP, then you may qualify for a state disaster guarantee loan. So if you are 501c6, if you're 501c6, then you do not qualify for EIDL or PPP. So you know that you would possibly qualify for for a state disaster loan. If you're a smaller micro business, you may qualify for up to $50,000 for this loan. You can go to ibank.ca.gov and check that out. If you're a larger business, you possibly could qualify for $1 million. You have to go through the financial development corporations. You can't necessarily go, you may be able to go to the lender first, but it's hard to know what lenders do state loan guarantees and what don't. So if you are curious and you're in the Bay Area, like Solano South, all 9 counties of the Bay Area, Santa Cruz down there on the coast, you can reach out to Chris Horton. He's one of our finance center advisors. So his information is there. He works with the NorCal FDC out of Oakland. If you're YOLO North, like Sacramento North, the Oregon border, you can email us at loans@asksbdc.com. There is a Sacramento-based financial development corporation called California Capital. It's also the Women's Business Center. Debbie Miramoto, the CEO there, runs an excellent operation, and she can assist you to potentially qualify for one of these loans, you can email us and we can get you connected. That's the state guarantee. Every Thursday from 4 to 5:30, NorCal SBDC partners with Case Force, which is a coalition of attorneys, mostly around labor law, real estate development, and landlord, or like landlord, I guess landlord law or real estate law, to answer questions, open-ended questions, and lots of questions for 4 to 5:30, kind of like what we do here. But there's no presentation. It's just Q&A. Either you can submit them beforehand, or you can jump on a webinar like you are with us, and then you can type them in and they can answer them. And it is pro bono, so there's no charge, even though they're attorneys. And it's an excellent program. So we're on it and we talk about loans, and then they're on it to talk about the employment law and the real estate law. It's actually really awesome. Lots of great conversations. All right, finally got to Noah Brode from San Francisco SBA. This is a SBA update. I'll let him go over this and kind of explain what's on the screen here, since he's the expert, and there's a contact information here for the disaster department of SBA. But I'll introduce Noah Brode and he'll do an update.
Yeah, so we have, and actually we don't have enough time to go into nitty gritty on updates, but what I will say, I feel like actually, maybe what we could do, Scott, is set up a day to even go into some loan forgiveness discussion at this point. But last Friday and I think it was the Friday before as well, SBA started to release the process by which business owners will apply for loan forgiveness. Both the form that business owners can kind of work through in order to start looking at that forgiveness process, as well as rulemaking around formal rulemaking around how the agency is interpreting different provisions of the CARES Act for the purpose of applying for forgiveness. So we now have a number of kind of like meaty clarifications around that forgiveness process that I'm probably don't have enough time to really go into all of the different items that have been clarified or rolled out. We're going to have to take some time, I think, and to set aside to talk about reference periods and covered alternative periods and debt forgiveness reduction quotients and all these lovely new terms that we're going to have to start incorporating into our vocabulary. And I think folks have also been waiting a little bit to see what happens with legislation in the House and the Senate, and to see how that might further shift things. But the real update is that we actually do have some meat in the bone to talk about loan forgiveness now, which during this presentation today, I'm not going to go into all the nitty gritty of those items that were set aside, just to say that between last Friday and parts of last week, there now is a process and a set of rules that have been released for business owners to look at for loan forgiveness reduction. For folks that are on the line right now that don't want to wait for that eventual next webinar, you can go to the Treasury website and see the items that have been released, and I'll put we can maybe put that link in the chat. It's a little bit on the nitty gritty. I think it is better to have a webinar where we go through FAQs and clarify, and maybe even with the SBDC go through that form on a step-by-step basis. The other big update is that economic injury disaster loan funding has, if we kind of think about the Paycheck Protection Program, sort of just really taking off and funding millions and millions of loans over the past 2 weeks or so ago. Well, now it's the economic injury disaster loans turn. And there are thousands, tens we're up to millions almost. Let's see, what's our last number for the, but the economic injury disaster loans, basically, they're being funded really, really aggressively, and the number of loans that are being made under that program and the pace has increased dramatically. Is really kind of the update for the economic injury disaster loan, and that program is kind of coming into the forefront, while the Paycheck Protection Program, there's still funding in it. We're still processing loans to that program, but we're looking at, if we're looking at that program having taken off and funded a big portion of it, now it's starting to, maybe dip down a little bit and pull back as folks move into getting funding from the economic injury disaster loan program and appropriations run out for that program. So neither programs have run out of appropriations. There's still money, they're still there, but there's kind of just a change in which program is funding the most loans at this particular moment in time. So I think those are the two, sort of big updates, neither of which I've gone into, big meat on, this morning. But yeah, maybe we can hop into questions from there.
All right, cool. Thank you very much, Noah. I think if you're available, you can either tell us now or I can contact you later. But if you're available this Friday from 10:30 to 12, and you want to do a larger update, we can put you into the webinar and then give you like 30 minutes or so. And then
I think that'd be good.
I think so, because it sounds like there's some more information. Obviously, we'll go to Q&A, and if they ask some questions that we don't know, Sunita and I, then we can answer. Yeah, thanks. So we are at the Q&A section of our presentation and webinar, and if you want to call us right now, you can get a live person at 833-ASK-SBDC. You can go to asksbdc.com, get a lot of other information. This video right now is being live streamed on this website. If you have questions you want to email us, you can ask us at loans@asksbdc.com. If you have questions in Spanish, we have a great team in Sacramento called under the California Hispanic Chamber of Commerce's, our SBDC affiliate program, and they're answering all these questions in Spanish. They're answering loan questions in language, and Oscar Garcia and his team over there does an excellent job, and they have individuals that are readily available to help you, advisors at no cost. So we will go ahead and go into the Q&A. And this is very rare that we only have 42 questions. Looks like Sunita has answered 24 so far, so we have 42 or 26. So I got 42. It's not bad. So hopefully we get through all these. If we can't, we will ask you that you email us or call us, and we can assist you. But we'll do our best to get through as many of these as we can. It says, for PPP, can you clarify / correct the CPA statement that owner-employee wages are not forgivable? Does either one of you know that?
I don't necessarily know how to parse that. So self-employed individuals what they pay themselves is forgivable under the Paycheck Protection Program. So if that's the clarification that's being asked for, if you're a self-employed individual, there's a variety of different structures, but it is forgivable, but there is a cap.
Okay, thank you.
No, is that to be clear? That cap is the $100,000 salary cap that applies to anybody else. Is that right, or is it different?
It is different for self-employed individuals. So for self-employed individuals, it's a $100,000 cap. Take that and divide it by 52 and times it by 8 essentially, and that is the maximum amount that an owner employee would be able to pay themselves under the Paycheck Protection Program for with these funds and receive forgiveness for. And so it's like 15,400. You might have even had it on the
slide. It's on the slide deck. It's on the slide
deck. Yeah, but it's a little bit more than $15,000. Okay. and that is the maximum allowable amount that that an individual an owner can compensate themselves through Paycheck Protection Program funds and receive forgiveness for.
Okay, thank you. Is payroll forgiven even if we don't use all the 75%? Say we only use 65. Is that 65% forgiven?
So it depends on, so I mean, the answer is that there is in the form that was released, I think the Friday before last, there's a method for calculating proportional forgiveness. So if you spent only 65% on payroll, it's a little bit more complicated than, it's not a super simple proportional reduction, but basically they're going to look at, okay, well, how did you spend that money? Did you reduce salaries? Did you reduce hours for employees? And depending on how much you reduced it, depending on how large those reductions were, the amount of forgiveness that you receive will be reduced. But it's not all or nothing, I guess, is the short answer to that question. It's not either you spend 75% and receive 100% forgiveness, or you don't. There's proportional reduction in forgiveness if you don't spend it all on salaries or payroll costs.
Okay, sounds good. Thank you very much. How do we handle an employee that is not coming back due to child care? FFCRA, question mark. Are we required to use the PPP to address this?
So PPP funds cannot be used for employees who are on leave under FFCRA. And that's because FFCRA has a dedicated source of funding to provide payments for employee leave. I can't, I don't work closely with that's Department of Labor that's working under the FFCRA programs. So I can tell you if childcare, I think childcare is, that might be an eligible expense under FFCRA. But I don't know don't take my word for that on that one. I would maybe follow up with, I think that you've got some HR professionals at the SBDC that are maybe become more familiar with the FFCRA provisions. Because if there's an individual who contracts coronavirus and takes medical leave for that, I know for 100% that medical leave is covered by the FFCRA. And I am, faintly, I've heard some things about whether someone taking qualified leave, schools are closed, for instance, and someone takes leave for that may have some amount of coverage, but I can't speak to that program.
Okay, thank you. Says Noah, can you clarify what you just said about telephone expenses for Triple P?
So, I think that was earlier in the presentation. It's this question about utilities, and so under the PPP, utilities are defined as payments for the distribution of electricity, gas, water, transportation, telephone, or internet access. So, any of those count as you can use up to 25% of your PPP funds towards those costs and still receive full forgiveness.
Okay, sounds good. I heard from an SBDC rep that was assigned to us that there's a possibility lobbying that idle funds may become forgivable, like PPP. If that's the case, what are the best practices we should put in place? Should we accept an idle loan?
That's pretty extremely speculative. I don't even know if that is really on the table for even any of the proposals that I've seen in Congress. And I don't know if you have other things to say on that. I mean, as a business owner, I wouldn't take an idle with the expectation of it becoming forgivable. and knowing, like I also won't speculate about future legislation and what it does and what, and say like this will happen and this won't happen, but nothing in the existing proposals I've seen has laid that possibility out.
Okay, sounds good.
Yeah.
We have a lot of questions today in regards to, can you provide any details about the appeal process for applicants who were denied EIDL? We have several of those questions.
Yeah, that makes sense because there's been such a large, a lot of determinations made on EIDL applications. Let me pull up. So when you got a denial for an EIDL, it should have also included, it should have included options for requesting an appeal of a decision that has made. I just want to, there's an email address and a fax number and a dedicated email address for appeals. Let me just pull it up here. The, kind of to speak towards appeals though, like what's being looked for, what's being not. Generally, when you get a denial, it should list why you were denied. And when you go to appeal or ask for a reconsideration on a decision that's been made by SBA for an economic injury disaster loan, the request for a reconsideration should include items that are, that are material for that loan reconsideration. And when we talk about what's material, well, one item is, if there was a specific item in the denial that was listed, so if it says, if it mentions a credit score reason, or if it mentions an ownership issue, if you're able to cure those specific items that are listed in a denial letter and resubmit for reconsideration, showing that, well, the credit score was lower because of one payment that I needed to, or because of and I worked with a business owner on this, they had one missed mortgage payment and they spoke to their bank, and the bank, the bank actually walked back the what is it? The bank, they worked with their bank to resolve that issue. The bank wrote an actual letter, saying that there were no further issues, that for that borrower, and that borrower resubmitted their request for reconsideration with their kind of improved credit score, plus that letter from the bank showing that that lower credit score had kind of been resolved, and the issue causing that had been resolved. So a cure for whatever was listed in a denial is important. And in terms of timelines and likelihoods and all of that for economic injury disaster loan reconsiderations, I don't know if I can really speak to that. I'm not out of the Office of Disaster Assistance, and the amount of loan requests under the economic injury disaster loan program for this particular situation, they're larger, and there's a higher volume of those loan requests that are still in the pipeline that haven't even been considered yet. And I don't know, likelihood or timelines or what is guaranteed to work on a reconsideration, but we're happy to work with folks as well to go through those reconsiderations.
Okay, thank you. So this is a good question that I'm going to ask right now, because when I get asked it, I'm not sure how to answer it, unless I'm just not paying attention. But the PPP money is in the bank. I'm a sole proprietor. I understand all the calculations. How do I pay myself? Do I write myself a check? How do I do this?
Yeah, so this is going to come down to documentation. This is sort of a work with your lender question. And your lender might say, go talk to SBA, or you can't get a hold of your lender. But for the documentation, that when you're paying yourself, I think it varies from lender to lender, because you'll be applying with your lender for forgiveness under the Paycheck Protection Program.
Okay.
Which that may not be like the clearest, like you do exactly this in order to have qualified documentation, but the truth is that when you go to apply, it'll be with your lender, and your lender will, we have over 5,000 lenders in the Paycheck Protection Program, and every single lender is going to be the one that is going to be asking for, be implementing this process. I will say that on the form that was released a couple weeks ago, when it talks about, there is a page that talks about documents that each borrower will have to submit with their PPP loan forgiveness application. And it does say that if you, canceled checks, most of the documentation refers to, how documentation for paying employees, but amongst those documentations, it says payment receipts or canceled checks or account statements documenting the amount that you may have contributed for any, for a particular expense. That is a form of documentation that's used for verifying payroll costs to employees.
Okay. Thanks.
Yeah.
Says, thanks for all the support. As described in several of the meetings, we have put our PPP in a separate account to track movements, but our payroll service removes all funds for paychecks from this allocated account. The issue we have is taxes and auxiliary state federal charges come out of the same account. What do you recommend, since these charges cannot come from PPP? I would just recommend that you separate them and that you show that. If you were to run your bank statement and show that this money, circle that these line items were from Triple P and these line items were not Triple P, and then show it that way. You're not gonna, if you do have payroll coming out of a separate account and you have these taxes coming out of a separate account or same account, you're not going to necessarily be able to prohibit any expenses that normally come out of the account because you have ACH hooked up. So banks will understand this, lenders will understand this. You just kind of have to print your statement and kind of carve it out and make sure it's very clear for them. Our employees pay half their health insurance. Since PPP will pay health insurance, do we stop deducting their health insurance from their paycheck? I don't know. What do you think about it?
Well, it's a business decision how you want to do that, but Paycheck Protection Program funds can be used towards employee benefits and still be forgivable. Maybe I'm misinterpreting the question, but the cost of those benefits are those are eligible payroll expenses under the Paycheck Protection Program, and it's not just for direct cash compensation. And unless you have a reason to change that benefit structure, which might be your own personal business reason, but there's nothing in the Paycheck Protection Program that would sort of exclude those employee benefits.
Okay, sounds good. Thanks. Our employees, yes, I apologize. EIDL loan approval document says that you have to sign all other disaster loans and grants to SBA EIDL loan. Can you clarify that?
You have to assign it, or what?
EIDL loan approval document says that you have to assign all other disaster loans and grants to SBA EIDL loan. Can you clarify that?
I don't necessarily understand. I haven't come across that one. Maybe if you could email with our local district office with more details around kind of the section of the agreement that you're looking at. And yeah, because I don't really understand the question, I guess.
I'll just put our information there for the email.
Okay, thanks.
Yeah, for PPP forgiveness, is Schedule C owners can only pay themselves 8 divided by 52 of the net profit, or sorry, 8 of the 52 weeks of the net profit. That means they only can pay themselves 73.8%. That means no 75%. Does that mean no forgiveness? Does that mean no forgiveness for the 25? Okay, well, all right. It's not 8 divided by 52. Okay, it's that's funny. I didn't think about doing it that way. It's yeah, that's not okay. You're a Bob Komodo that answered that question. That's not how it works.
That was Bob. Okay.
That's funny, Bob. But I'll just sell you to email us. But that's not how it works, Bob. It's the other way around.
Yeah.
You're supposed to take the calculation as we talked about it, not like create a brand new application. I mean, calculation.
Basically, take that line 31, break it out into a weekly. So divide it by the number of weeks in a year, 52, and then times that by 8.
Okay. For PPP loan forgiveness, our payroll is twice a month. How does that impact our choice of alternative payroll covered periods, since that seems focused on biweekly or weekly payrolls? So
alternative covered period is pretty much only eligible for folks who do biweekly or more frequent payroll calculations. So that means you don't have the option of that alternative payroll period.
Oh, thanks. Okay. To clarify, if you receive the PPP, the idle advance has to be repaid through that, correct? Well, it's not true, like stated that way, but if you receive a PPP loan and an idle advance, you take the idle advance amount, minus it from the PPP amount that you got approved, and then that would be your total 100% forgivable potential with PPP. So it's not like it has to be repaid through PPP. Says a good source has said that it would be possible not to pay back the idle advance even if you have PPP, but that conflicts everything I've heard. Well,
yeah, and actually this is one of those topics where I mentioned this, I think last time I was on the calls, where there is a valid kind of question mark or caveat to like whether it's going to be 100% like in every single situation where the idle advance gets backed out of the PPP, but we're awaiting further guidance on that. And our advice to business owners right now is to expect the idle advance to be backed out of the forgiveness amount of your PPP. As we get further rulemaking and further clarification from the Treasury Department, there may be some, saying like, okay, well, it's, like further clarification about exactly under what circumstances that idle advance won't get backed out and exactly under what circumstances it will, but those answers don't exist right now. And I think for a business owner at the moment, you should expect it to be backed out. And if as we get further clarification and rulemaking from Treasury, we get a clearer answer than that, we'll make those updates.
okay. Sounds good. I applied for idle at the very beginning. Application started with a 2, then reapplied on 4.6. Appropriation starts with 3, or application starts with 3.6. But we are a flooring company, not agricultural. Can we hope that we will receive our loan as we applied before the second wave of funding? So the simple answer is yes. Since you applied at 4.6, you are in the queue. They are going to get back to you.
Yep.
It's just that they're a little behind on us.
Basically, when we say that we're only accepting new applications, so right now we're only accepting new applications from agricultural businesses. If you have an application already in the queue, those are being processed. So I think the economic injury disaster loan program stopped accepting new applications. I think it was last month on the 16th. And I think that was the day that we closed that portal last month. And so if you had applied prior to that, your application is still being, processed and reviewed. And when we relaunched that portal, we only said that we would accept new applications from agricultural businesses.
All right, thank you. All right, so it's 11:23. We have 37 minutes. We've answered 65. We have 41 left. Is there any new clarification on the 20% ownership issue? Per the CPA last week, the gross payroll is not to include any pay to owner partners with more than 20% ownership. Do you know that answer, Noah, or have you heard that?
Is this for EIDL or PPP?
PPP.
About
20% ownership or more. Do you know that answer, Sunita, or do we still need more clarification on that 20% or more?
like who needs to be included on the application or what?
No.
Or whether you can pay people like
gross payroll is not to include. Okay, so we had a CPA on here last week. She said that the gross payroll is not to include any pay to owners or partners with more than 20% ownership. So like an owner, like how that, like that. Never mind. I'll just have her email us. Sorry.
No, we don't have clarification on that, Scott, but per the application, it's just shown in a different spot. It's not shown in the same with employees. It's shown in a different spot. I think it's number 11. So that when I reviewed that, that's where I saw the difference was. I don't have clarification on that 20%. I'm not sure if Michelle had read it on, because she did state that she receives, 7 to 15 updates a day, and it may have been from a different source than Treasury and SBA. But right now we're just going off of what's written on the SBA and Treasury websites.
Okay. For payroll raise to 25% for PPP eligible. All right. Is a payroll raise to 25% or 25% for PPP eligible for forgiveness?
Mm-hmm.
An owner increase the existing employees or the new hires by 25%.
Yeah, so this is one of the clarifications that we're able to get over the past week. And it's about whether you can increase the amount that you pay your employees, whether through hazard pay or overtime or other forms of increases. And the answer is yes. And there actually isn't a 25% cap or for increases. There's not a 25% reduction or cap or anything. Basically, you just can't receive forgiveness for any payroll costs above that $100,000 cash compensation amount that is baked into the Paycheck Protection Program. So if an employee is earning, overtime or hazard pay or has a salary increase, and so long as it keeps them under $100,000 on an annualized basis, then there is no it's not, they won't impact their forgiveness in any way.
Okay. All right. We have a really long question here. From your webinar weeks ago, I applied for a second time for the EIDL since I had applied so early and the number with a 2. So I reapplied and got a number with a 3, which you noted as needed. I was then offered a very low amount, $1,200 on the loan with the number 3. When I called and they put in a note and that asked if it was a typo, since that would not even cover a single day of running my business. Then I got we have canceled this loan application since we found you have a 2 application. So now what? Is the number 2 application still good? What do I do now? So I could just have them email us and we could try to figure that out for them.
Yeah, if you email our district office also, we can try to connect you directly with the Office of Disaster.
What's your district office? Let me put that
So
here.
it is sfomail@sba.gov. I'll put that in the chat.
All right.
We're actively, connecting folks, that are in situations like that with our Office of Disaster Assistance folks, and escalating issues as they come up when we have maybe errors or issues like that.
Okay. Says sole employees of their own S corps can't give themselves hazard pay? Question mark. Can a single member S corp give themselves hazard pay?
So there's just a built-in cap for how much you can compensate yourself under the Paycheck Protection Program, and that's that $15,000 amount. The most individuals who are self-employed are not giving themselves overtime or hazard pay, or they're not paying themselves in any of those kind of structured ways that we would look at with other employees. For self-employed individuals, what we have under the existing guidance is that cap of that built-in, baked-in cap.
Okay. All right, just type this answer real quick. Okay, somebody. All right. On that. Can I pay off or pay down an existing SBA loan with higher interest rate with the EIDL? So you can't pay it off, but you can pay your monthly interest payment to that.
Yeah. With the exception that if it was a short term, like if it was like a bridge loan that you had just taken out in the past month or so in order to float you while you're waiting for a decision from the EIDL, then you if you have like a short term debt that you took out just as like a bridge loan or financing, you can use EIDL funds to refinance that form of debt. But otherwise, only interest payments. Any debt obligation you had prior to the disaster has to be just interest payments only.
All right. So we've answered 84. We have 31. We have 29 minutes. So we could do a question in a minute. I know we can. All right. So if a business accepts an SBA EIDL loan and before the loan is paid back sells the business, is the loan transferable? Well, it would stay on the books, right?
Yeah, and there's a personal guarantee that gets taken out with an EIDL loan. Yeah. So I don't believe
the loan would be transferable though, because if you sell the business, then you
would go with the business.
Go to business, yeah. How soon do you have to respond to the offer of an EIDL loan?
For that time period.
Say you're offered it today. How long do you have to accept it?
I don't know actually. I can follow up with our Office of Disaster Assistance to see if they have like a hard and fast rule with that.
Yeah. Okay.
So
and then says, is it still a guideline that you have to ask? This is all 4 questions. This person was just going for it. Is it still a guideline that you have to ask for PPP forgiveness right at the end of the 8-week period? Yeah, so that's, you're not allowed to ask for forgiveness before. So yes, you do have to wait after 8 weeks and then.
Well, you don't actually have to ask for forgiveness immediately at the end of 8 weeks. You have up to a full calendar year to request forgiveness. So a forgiveness application has to be submitted, within a full calendar year, but it's not something that has to be requested immediately.
Yeah. Okay. That's good. Can PPP be used for a car loan payment or DMV registration? And the answer is no. So answer all 4 of your questions. All right. We received the PPP May 1st. We have 4 employees, myself, owner, and my husband. The other 2 are high school kids who don't want to come back and apply for unemployment. One didn't tell me till after I paid her for 2 pay cycles. What are my options? I can't get these employees back, and now I paid one and she's getting unemployment. Yikes. Well, we were talking about this before the call, actually. We were told that, Sunita, is this an example where the employer can report them to EDD, or?
Per the new guidelines, they would want to see that documentation. So they have to be able to get that portion allowed. So they would have to have written documentation that they offered the employee their job back at the same pay, same hours. And then if they decline, they should see, hopefully it'll be in writing. And then they also have to let EDD know that. So if they put it in writing, or I don't know if EDD has something on their website at this point in time, making it easier for employers, but everything in writing is the best way to go. And it is unfortunate, you know, that you have to go to that extreme, but it is now written in the guidance.
Yep. Yeah, the guidance that the rulemaking that we issued said, yeah, you have to have made that offer, has to be the same salary or wages. That offer was rejected by the employee, that you've documented all the above, and that the borrower has notified EDD that they got all that.
Okay, thank you. We have 25 minutes and we have 31 questions. We've answered about 90 of them. For an EIDL loan, does it require a personal guarantee if I'm a C Corp? The answer is yes, it does. FYI, the deadline to return EIDL docs is 2 months. That's what somebody said.
Okay.
Is that true, or is that like hearsay?
I mean, yeah, I just, you know, while we're here on the webinar, I put in a question to our Office of Disaster Assistance. So, you know, I can get confirmation on that one way or another. So that's just one business owner sharing their experience.
Yeah.
But I'm not disputing it. I don't.
Yeah, we're getting different information in the chat. Some people are saying 30 days, some people are saying 2 months. So let's wait for Noah.
I'm gonna try and get something a little clearer.
Yeah, absolutely. So we'll wait on Noah to give us clarification.
What documentation will be required for EIDL after funding to know they used it in compliant ways? I don't know what that means, but we don't know what documentation will be required after, or required for funding, or required for EIDL. Oh, there is no documentation required for EIDL after funding because it's not a forgivable loan. So you don't have to like necessarily give them.
There is a discussion because there are, you know, EIDL funds have to be used for eligible business loan purposes. You know, they have to be used, you know, there are restrictions on how you are allowed to use those funds. Similar, you know, like if you get a business loan for, you know, a normal business loan from a regular banking institution, there are restrictions on how you can use those funds. You know, you can't get a business loan and then use it to remodel your house. And, you know, what, in terms of, so that's just part of the agreement that you sign as part of the closing documents on the loans. That doesn't come along with, you know, mandatory reporting requirements on how you are spending every single dollar. But if it is discovered either as a part of you know, random loan reviews or other issues that you know, down the line, SBA could seek recovery if the loan funds aren't used, you know, were found to not have been used appropriately. But it's not like PPP where you have to like go fill out this form and, you know, submit every single receipt and document every single expense. You know, it's part of the kind of terms and conditions of that loan agreement that you sign, how you will be using them.
Okay. It says, one here, like, all right, so do you know how the max is $100,000 for an individual? Does that include benefits, or can you add benefits on top of that?
So cash compensation has that cap of $100,000. And on the form, benefits are treated separately. And and this is something, you know, when we sit down on Friday and I go over, I'll talk about sort of in that space. But on that form that people fill out, cash compensation is treated separately from benefits.
Okay. Cool. All right. Let's see what we got here. So when I receive the PPP loan, can I pay my employees their 3 days sick pay? I don't know what that means, but I think you can, right? Because it's included as part of the payroll cost. That's like sick pay is included.
Yeah. So long as it's not FFCRA sick pay, you know, as long as it's not sick pay for coronavirus leave or something like that, that's not allowed because, you know, there's a separate program that will pay for those costs.
All right, cool. All right, so long one. For those of us whose rent and overhead are our highest costs more than payroll, taking on more debt, even at low interest rates, or just adding more operating expenses when we have little to no revenue coming in, is there any chance at making this forgivable or getting grants to help us stay in business? We don't know if the EIDL is going to be forgivable, and possibly of grants, probably not as high as you're looking for. There are some grants out there, but not. Says, and then this gentleman goes on and say, it's time to help bail out Main Street and stay in business while Walmart and Amazon keep steamrolling over us. More debt will not help us recover. So let's read that. Can the interim loans that were acquired while waiting for EIDL to come through be paid off with EIDL? And the answer is no, but you can use.
Well, no. So with an EIDL loan, if you took out a loan during this interim period, you know, I think February 15th is the date of the disaster. So if you took out a bridge loan or have taken out financing to get you through the disaster or to get through this waiting period, you can use the EIDL funds to pay off that debt. You know, that debt, you have to have taken out that debt for the purpose of keeping your business afloat. You know, this can't be like, you know, these have to be business, you know, debts that are incurred for business purposes. But that's just in the case of that bridge financing case. Any debt that you may have had prior to that February 15th date, you can only make interest payments on.
Okay, thanks. I applied for the SBA loan early, then applied 2 weeks ago for the PPP. When I applied for SBA, I said I had 7 employees, as I understood it to be a head count. Most are part-time. When I applied for PPP, I understood it was based on full-time employees, so I added the total hours and totaled it 3.3, so I claimed 3 employees on PPP. Is this going to complicate either loan? I have received $7 grand from the SBA, but no other contact yet, and nothing from PPP. So when she applied for EIDL, she put 7 because most are part-time. When she applied for PPP, she put 3. She wants to know if it's going to mess up her applications. And it makes sense that you received 7 from the EIDL advance because that's 7 times 1,000, but I don't think it's going to affect.
No, that wouldn't. And also, it sounds like you haven't received your PPP yet either. So it's not going to affect your PPP because you don't have a PPP yet. And on the economic injury, the head count that's listed the only thing that impacts is the EIDL advance. For the PPP side, the application sometimes asks for a head count, but for the purpose of applying for forgiveness, it's not going to look back to your initial application. It's going to look back to 2 different time periods. And you know, there's going to be a reference period and the covered period essentially. And it's a calculation that's done sort of independently of what your application was.
Okay. Thanks. Do you know this one? If a business has an accountable plan, which includes an office and home, OIH, reimbursement to employees working from home during the period, Would OIH payments be treated as a forgivable non-payroll rent expense? Or triple P? Probably not, right? I don't even know what that is.
Yeah, what's an accountable plan?
I don't know. All right, I'll just have the person email us.
Okay, yeah, that's fine. That's not necessarily.
Huh? All right. The EIDL paperwork said you can't relocate without SBA approval. I realize this makes sense if your shop burned down in the wildfire, but now the emergency is nationwide and I may need to move home-based business for unrelated reasons, bad neighbors. How difficult is it to get SBA approval to relocate? If I get an offer out of the blue from a friend, they won't be able to wait more than a week before accepting a different roommate.
So in the same way that you need to update your address whenever you move locations for any business loan, you need to notify your creditors and anytime you move. So that's kind of sort of standard with any kind of debt service that you have. So that's going to go into the debt servicing portion of the economic injury disaster loan program, and it's mostly a matter of just keeping your contact information up to date.
Okay. All right, let's type in another answer. If the PPP loan forgiveness application in the PPP loan forgiveness application, it asks you to enter your EIDL advance amount. However, this amount was not included in the forgiveness amount worksheet. Does it mean that the EIDL advance will not be excluded from the PPP forgiveness amount? It is supposed to be. It is supposed to be deleted from or excluded from the PPP forgiveness amount.
Yeah. So anybody who's going into that, like thinking about how these two programs interact with each other, my advice is to assume that however much you received under the advance, to assume that that will be backed out from the forgiveness that you receive under the Paycheck Protection Program. As we get further guidance and clarification around how these two programs interact with each other, we may find that in some cases you will not have to back it out, but we don't have that clarification about under exactly which circumstances that will be in.
And your email is the SFO mail@sba.gov?
That's correct.
Okay, I'm just gonna have somebody email you here because they're asking about that. Have you heard anything about a delay in the instant grant funds after a portal has been established for the disaster loan?
So maybe this, I think that with the individuals, in some cases, I have worked with some business owners who have been invited to accept an economic injury disaster loan, and before they have received an economic injury disaster loan advance. The majority of cases, you get the advance first, and then you get the loan. And there have been a couple of situations I worked with business owners where they've gotten that loan offer before receiving the advance. If you're in that case, I'd suggest you please reach out to our district office with your loan numbers and a few details, and I'll escalate that to our Office of Disaster Assistance folks.
Okay, I've been putting your email in here on certain ones that you can answer.
Yeah.
Yeah. So we have 13 minutes. We've answered 112. We have 21 left. Again, if we can't get to it today, please call us or email us, and we'll help you today and get you to an advisor. My client had to close due to COVID. They stopped paying their rent at the location and completely moved out. They are now opening back up, but in a new location. Will the rent at this new location be forgivable, even though it is not the same lease as they had as February 15th? So probably no, right?
So they've moved locations since February 15th. So they're saying, and they're wondering.
Yeah, they moved locations after February 15th. They want to know if their rent will be covered in the new location. So probably not, right?
Yeah, it's for agreements that were signed, or incurred prior to February 15th. And I don't know if we have provisions, kind of laying out exceptions or anything for agreements that are, that were started after that date.
Yeah. Okay. Is there an actual percentage that payroll is forgiven for owners on the company payroll? Is there an actual percentage that payroll is forgiven for owners on the company payroll? I don't know that.
So if there is an owner, in this case, this would maybe be like an owner who's listed as like a W-2 employee or something.
I don't know. I just put.
Yeah.
It's just asked like that.
It comes down to how you are treating the individual who's receiving pay, and it depends on how they file taxes. So if it's and I've worked with some business owners where it's like a two-person business, like a husband and wife team, and the wife takes a salary, like an owner draw, and the husband is on a W-2. And in that case, you would treat the husband's salary as a payroll cost, as an employee payroll cost, and you treat the wife's owner draw as owner compensation with that $15,000 cap.
Okay. I received my PPP funds. Yay! But this is odd as then EIDL email came in but received no EIDL advance yet.
Yeah, so if you ran into that case, please email our district office if you were offered a loan prior to receiving the advance.
Okay, get that going for that. All right. All right. We pay biweekly, receive PPP funds on 5/18. We want to choose alternative time period. What is the definition of first payroll date? Would it be the beginning of pay period, which is today, or the first direct deposit date, which would be Friday, the 29th? I think it's the first payroll date. So they got funded on 5/18. Can they choose today as the first payroll date? Yeah, that's what I think it is, right?
Yeah, that's accurate.
Cool. I have two banks. One declined to provide PPP loan because I was seeking less than 10,000. The other is overwhelmed. What options are there for PPP without a prior banking relationship? There's lots of them. We have a bunch of them. There's some that are less than 10,000. Looks like there is a Zoom bug. I asked my question and it appears to have disappeared. A Zoom bug. I don't know. Is there a Zoom bug out there, Alan? Where's the Zoom bug?
It's not a Zoom bug, but it is a feature of the product. If you disconnect and then come back in, you won't see the Q&A from before you reconnect.
Good stuff. This may be a repeat, and the earlier question wasn't sent. I'm a video event producer and earned income in 2018 and 19 in California with 1099 California-based contractor. My address is currently in Oregon, and I have a startup incorporated in Oregon. I pay taxes in California. I've lived most of my adult life, work, education there, but landlord move in pushed me to Oregon. In which state do I apply for support? Thanks.
Well, it's not a state-by-state. Neither of these are state-by-state programs.
Okay.
They're driven by either lenders, or they're either a federal application that you apply to directly, or you apply to a lender. And if you're talking about, unless you're talking about pandemic unemployment assistance, in which case it would be the state you have residence in. I can't speak to that program, but generally it's the state that you're residing in. And for our programs, they're just dependent on the lender you're working with, or the application you put in with our federal agency. They're not dependent on your location.
Okay.
But from the SBDC perspective, he'd have to reach out to the one in Oregon because that's where his company is and where he is. So
that's true. Yeah, if you're looking for counseling and mentoring assistance, there's a different network of nonprofit consultants that serve specifically Oregon.
But if they're not helping you, you could definitely reach out to me and we'll help you.
We help everybody.
All right, Scott.
All right, just putting it out there, I asked the question, is payroll forgiven even if we don't use all the 75? Say we use 65, is 65% forgiven? We do not know that answer yet. We did not decrease employees and did not decrease wages. In fact, we increased wages and hope to add another employee in a week. Now, how would that above question be answered? We still don't know.
Well, no, if you didn't decrease employees and you didn't decrease wages, you won't run into reduction calculations. But in terms of the total size of the loan, let me, I think that's one where also we want to walk through that form on a step-by-step basis. And, hypothetically speaking, the way it should work is that when you applied to the loan, that wouldn't actually be possible. Like if you had applied for a loan for 2.5 times your average monthly payroll costs and you hadn't reduced wages, you've actually increased them, and you continue to pay your wages over that 8-week period, by definition, you would be spending more than 75% on payroll costs. So maybe, in your case, there is a misalignment between the calculations of the application, like when you first applied and what your lender gave you, and what you're applying for now. You might want to reach out to our local district office and we could talk about that.
All right. Let's see here. Says, can we offer employees their job back at 75% of pre-shutdown hours wages instead of 100%? And if they refuse, will they still be counted toward our FTEs for PPP forgiveness? So can you offer them a 25% reduction? And if they refuse, can you still count them as your FTE? Can't, right? If somebody refuses to come back and you still count them as your FTE, can't count them as you, right? You have to just show a document that you tried.
They just get excluded from the FTE calculations.
So they are excluded, I guess. You can't.
Yeah. So I mean, if someone refuses to return back to work for an eligible offer, then they're not going to be. Yeah, they'll be walked. They won't, that refusal won't be used against the business owner for calculating the reductions.
Okay. So we've answered 125. We have 11 left. And we got 5 minutes. All right. About the self-employed individual, technically they are not supposed to be on payroll. The IRS does not like it. So the only way to properly document how you pay yourself would be by either e-transfer to your personal bank account or write a check from the business account to the personal account. It's not really, there's no question mark. So
just some advice for other people.
Okay. All right. Do hours worked before the date of the PPP deposit have to be backed out of the first payroll paid after funds were deposited if they are on the same check? Do hours worked before the date of the PPP deposit have to be backed out of the first payroll paid after funds were deposited if they're not on the same check?
So I think they're, maybe if you're a bi-weekly or something and you received paycheck protection funds in the middle of your payroll period is what that's asking about.
I think I'm going to tell them to reach out to us. We're a sole proprietor that incurred significant starting costs in 2019. Therefore, our Schedule C is reflecting low net profit. Can I exclude asset purchases placed under depreciation deductions? Since those are not regular occurring expenditures, can I calculate my total request amount with just recurring costs? Well, if you filed your Schedule C, you would have to do an amendment, which I don't recommend, but I'm not a CPA or your tax accountant. So I'm going to give you our email and you can reach out to us. That one's a little bit case by case.
That sounds like a PPP, not an EIDL on that. Yeah.
Yeah, that sounds like a PPP. Yeah. All right, here's a really, really long one. I heard there's lobbying to increase the period covered from 16 to 24. So there is. Actually, the PPP is actually 8. It's not 16. It's 8, not 16 or 24, and it's not law yet. So we have no idea what's going on with that. So this question is really long, but it's asked a bunch of stuff. So we don't really know.
About the pending legislation. And in the language about the pending legislation is until legislation is introduced in the House, passed in the House, after a debate and negotiation, it goes to the Senate, there's further debate and negotiation, gets passed in the Senate, goes back to the House for more debate and more negotiation, gets passed again, can go back to the Senate again, even at that point, and then gets signed into law by the president. And if it clears all of those hurdles, then it has to be interpreted and implemented and turned into rulemaking by a federal agency. So this bill becomes a law kind of stuff. And up until that law is signed, and by the president, it doesn't really exist. It's just on paper. It's just a proposal. It's just a set of ideas that don't have effect in force.
All right, we have 1 minute, and we've answered 130, and we have 10 left. I thought for sure we were going to get through all these because we didn't have nearly as many as we normally do, but there's a lot. So there's a lot more thought-provoking questions here. Please verify EIDL allows for payments on fixed debts, principal and interest, not just the interest portion. Is EIDL pay for interest and payments and interest, or just interest for long-term debts or fixed debts?
For long-term debts, only interest. So any existing debt that you may have had prior to February 15th, it will only make interest payments on.
Okay. Sounds good. All right. Says, sorry, I missed the answer to my question. For payroll raise to 25% for PPP eligible for forgiveness, can owner increase the existing employees or the new hires by 25%?
Yeah, so there's no, it's actually more generous. It could be more generous than that. Essentially you are limited to that $100,000 cash compensation limit. So $100,000 on an annualized basis is a cap on cash compensation for what any one employee can receive under the Paycheck Protection Program. And you, as a business owner, if you're paying hazard pay or overtime or need to pay people more because of pandemic unemployment assistance, in order to make it attractive enough for an employee to return back to your business, you can do that so long as you're not going over that $100,000 on an annualized basis.
Okay, cool. Good stuff. So we did as good as we could. We answered 134. There's 5 questions. We're not going to get to it, but we think we did a really good job putting a dent into it. Please call us if we did not answer your question at 833-ASK-SBDC. Go to asksbdc.com if you have any other things you want to learn about what's going on. You can email us at loans@asksbdc.com. If you want this in Spanish, you can email us at espanol@asksbdc.com. We thank you very much for joining us today. We thank you, Alan Montague, for helping us with the webinar and the Q&As. And then we also thank Sunita Maharaj, Associate Director, with all the Q&As and assistance with that. We thank Noah Broad so very, very, very much. And we'll put together a webinar come this Friday from 10:30 to 12 we'll have SBA actually do a kind of a full update per se, as much as you can in 30, 40 minutes like that. Yeah. And then thanks to David Franklin, who's also part of our team, is on the call as well, helping us with some back-end logistics. So thank you very much. Until next time, we appreciate your business, and we're here for you at no cost. So thank you very much. Bye.
Thank you.